Good afternoon. This is Brad Dennis with BIS Commodities with a weekend wrap-up of the latter part of April and the first few days of May. First, let's get to it in the grain markets. Corn's viewing two different things, and it's pulling it two different ways. Corn's looking at a very good window of opportunity next week, whereas we're seeing some warming temperatures, we're seeing producers being able to get back into the field, we're seeing planting to progress. Should be around 27% or so on the planting progress. It's going to be below the 5-year average, but it'll be progress well ahead of last year, so those planting delays will not be an argument for higher prices, I guess. The other side of the coin, though, is the wheat market. Just last night we had sub 30-degree temps in Kansas. There's some more kill down there. The wheat tour came through as advertised, putting a low number on what the wheat crop is going to be. Now, after Thursday night's freeze, you're looking at Monday and Tuesday of having 90-degree weather out there. So really stressing the crop, and with that, along with some upped antes in the Ukraine situation, a little bit more of fisticuffs, might you say, going on between Putin and Ukraine, that always brings back a little bit of risk premium into that market. So we're seeing, wheat close pretty high today. Not over that 725 level, though, yet in July wheat, which is kind of been a barrier for it, but higher because of geopolitical and some weather issues. Now, once we get into next week, though, we're looking at some ample rains coming down into those drier areas of the plain. So will that rejuvenate the wheat crop or not? Only time will tell. The one thing we do know is that spring has been cold, so the wheat isn't being pushed forward. It's not at that critical stage in a lot of areas yet. So the corn's looking at both of those. Right now it's saying, hey, we're going to get stuff planted, so we're going to be on the downside. You might see something where we're in now a 50-cent range on that D's corn of 475 to 525, and trade out that way. The other piece of information next week, though, that we'll want to see is what the ending stocks are in corn. We're going to get balance sheets out, and what you want to look at is, are we at that 1.3 billion crop, or are we less than that? If we're not taking anything away from ending stocks again, look at that July D spread. Right now it's still inverted. There's no reason with the amount of ending stocks that we have that it should be inverted. So that's something to watch. And Friday's S&D report will tell us which way to go on that one. Like I said, frost problem for wheat, and now 90-degree temps on Monday is going to be a problem for wheat. So we're seeing that risk premium in there along with the Ukraine. The bearish part of the wheat market, though, is that we did have the Egyptian tender today, and they bought both Russian and Ukrainian wheat. So Egypt isn't scared about buying Black Sea wheat, which should tell you that even though there are further escalations in the problems between Putin and the Ukraine, we should still see the export market work properly. Now, the other one is the Kansas City wheat, and that's what's moving to the upside. We have a target on Kansas City wheat now of around that 840 level, just from a technical basis. If that continues, it will pull up Chicago wheat. Over in the beans, tough week for the beans. We saw July beans go up to that 1525 level, be rejected by it, and then come back down to that 1460 level in 1 week. So nice little range there, but we also saw 1460 hold. as well as the July no spread hold at $2.30. What brought us back down to this lower level? Well, one was we finally saw net cancellations on the export sales. So old crop finally added back beans to the balance sheet. And that's what we have to continue to do to reduce the tightness of supplies. We're also seeing the window of opportunity for corn to get in properly, so right behind that beans will go in. So we're not seeing any kind of issues with beans being planted. We're also looking at Louisiana. Look at what happened from the report on Monday. We saw 55% planted over there. Those are beans that are going to be coming out in July and August. So we're starting to see new crop beans in a very realistic 3-month period. Also, we're looking at numerous cargoes of beans that are being diverted to the U.S. And I believe the first shipment should be offloaded Tuesday of next week in Wilmington. So when these beans start showing up on the shore, and we're not sure how many cargoes, it's a significant amount. It's going to, one, increase our imports for our balance sheet that's going to come out next Friday, and two, we'll see how it treats the basis over on the East Coast. That's been the hot basis. If we start to see that relax, I could see that former support area of 1460 in July possibly giving way, and then even a further correction going on. Yesterday or Thursday's big sell-off saw open interest in both corn and beans down. So we did have some funds liquidating their positions. Cattle market. Cattle market was on fire this week. You had April cattle going off on Wednesday, and I believe it was right around that 145 area. Now we have June trying to match up with that area. It rallied up to 139.95 today before it set back. So what we saw on Thursday, the 1st of May, was a little bit of a pull out of money from the ags, put them into the livestock. We did not see that as much today, and we saw things back off a little bit. So it'll be interesting to see if we can catch up with cash, or if cash comes back and we still have that $6-7 difference between cash and futures. Think about this: when April went off, we were right in line with cash, but when cash went up to 151, April wouldn't follow suit. So kind of an interesting phenomenon out there in the cattle market. Feeders, posting another set of highs today, limit up for half the day, and then at high noon today somebody shot and boom, they came off and they closed lower in the maize. That index on maize is still trading around a 179 area. So what I'd say is watch out for the cash flow into that cattle market, especially the feeder market. Seems very disjointed from where the index is, whereas on the cattle market we didn't see anything as of 3 o'clock as of trade in the cattle market. So we're probably going to see packers try to bring down their bid a little bit here. Today was the first Friday of May, so we did see non-farm payrolls released. Non-farm payrolls were up 288,000, which was well above the 215,000 that was expected, and the unemployment rate dropped down to 6.3%. Everybody was kind of anticipating 6.6%. Now, the reason for the big drop in the rate was because we lost about 800,000 participants in the job market. So our job participation rate is at the lowest level since 1978. If we would have had those people in the jobs market, our unemployment rate would have gone up to 6.8%. So that kind of puts things in perspective. Yes, we're creating jobs, which is great, but we're not seeing the things we need to see this economy really explode to the upside. And it kind of looks like in the S&P that 1900 is going to be a little bit tougher to get through. On the interest rate front too, once we saw that big high number, we saw 10-year notes, interest rates rise on that. But after looking at the hourly earnings of that wage report, you're not seeing any wage inflation. So actually the 10-year note went right back to where it opened up at, yield-wise. So you're not increasing the yield, so they're not worried about inflation down the road because we're not having any wage inflation right now. If wage inflation starts coming around, then I would say that those bond prices should start heading south and staying south. Over in the energy sector, still building up the crude supplies. Even though Cushing is down, we're piping crude from Cushing to the coast now so that it can be refined, but the Balkans are really giving an increase to that crude supply, so we kind of look for further deterioration in the crude oil market. A conspiracy theorist will say, hey, the sanctions that we've given Russia are pretty good, but if we break the price of oil, that'll hurt them even more. So, believe what you want, but price of oil should be coming off a little bit. So that's kind of a summary of the last half a week of April, first half a week of April, or of May. So, end of broadcast.